Hello, today is Friday. It is not quite the close, but we're getting there. So no assumptions, just kind of showing you what I see. It is 3:22 in the afternoon, Eastern Time. Today's session is going to be titled Leaders Are Leading, Laggards Continue to Struggle. So the first thing that I want to show you is this. I want to show you, and just so you're aware, this is not a push, but if you ever want to follow more closely as to what I'm seeing, here's my Twitter handle, @Jonathan_Gurney. Okay, so no push there, but if you want to see more closely, more detailed information, this will help you. So no predictions, okay? I've actually added a few times this week, took quick profits because that's truthfully, this week, that was about the only way you could really be extremely profitable. There were a few names that held up well. So the leaders are doing okay, but we're starting to see some trickle down. So again, we've been kind of telling clients this. Again, this is for all information. This is all informational purposes only, no recommendation. Just keeping my clients aware of what I'm seeing and why I'm making the moves that I'm making. So this is all opinion based. This is not a recommendation, especially if you are not a client. So just keeping you posted. So the last several months, this is the S&P 500. It has been a cycle of mid-month, we test the 50-day moving average. And this is no different. Right now, this was as of last week. We got a little bit overbought. And my personal rules are, hey, if I miss an opportunity, now is not the time to add, which was the case. And now we are trickling lower, as you can see right here. So key levels continue to be bought. They go a little bit higher and struggle. So if I zoom in a little bit closer, I can show you this. And this I'm going to turn on because it's more accurate. There we go. So you can see all week the trend has been down, but there have been opportunities. You just have to be super quick. Overall, the risk reward has not been great this week. So I've been making sure to say, hey, seasonality I know is not great. Don't force trades. And so even though I have not done well this year, I'm not going to push and break rules. A lot of new rules have been added. Where I've actually struggled the most, objectively, is holding on to winners, taking profits too quickly. And that is something that I need to improve on. Okay, so that's something that I'm working on. But this week, in terms of following rules on the downside, we took quick profits. So we're actually positive on a week where, if I update this, you can see to be positive on a week when the indexes are down, we're barely positive, so it's nothing to boast about. But the fact that even if we were flat for the week, that's a win. Okay, so we're just barely positive. I feel like I'm in a really good position to begin adding, and I think that time is definitely getting near. One thing that I'm really watching is there is a gap right here. It's not that far away. I mean, you're talking 44.50 is very, very close. And I think if we don't get back above 40, I'll show you in the level. If we don't get back above 44.79, which is like right around here, 44.77, this will probably test that. Again, just being objective. I'm not negative on the market. I actually think it'll be bought very soon. Okay. So I'm going to, not assume it's going to be bought, but it would surprise me if this does not get bought. Right now, the NASDAQ is barely down. Like if I go here and QQQ, I mean, this is barely even down. It just broke the 10-day moving average. So no real damage. And if I were to show you some of the names that I'm watching, for example, like the Googles of the world, you can see once these kind of start to give way, the market gets a little antsy. One thing that I was really watching today was at one point, the indexes were testing the 20-day moving average on the S&P 500. The VIX was negative. And that's truthfully not what you want to see. You don't want to see complacency usually at a key level. You want to see fear. because you want to see fear, because then people add shorts and then we can go higher. That's not what's happening right now. And that, truthfully, out of anything that I see, me being a bull, that's the biggest concern. Now, the VIX is finally given way a little bit, which is basically the fear index. I shouldn't even necessarily call it the fear index. It's more of a volatility index. And you can see that we're above 20, which is a red flag. And also notice this, just being objective, we are starting to, each time we go lower is a lower, it doesn't go quite as low. It's a higher low. And so I'm starting to wonder, do we need a little bit more of a downside? I'm not going there. I'm thinking in my mind that could potentially happen. I'm open-minded to it. But as of right now, we have not, there's nothing to show that a trend is broke. We're not even near the 50-day moving average, which would be, I'll show you, should be right here. So we still have a long way to go. And every time we've touched it, as you can see, we have bounced. So the next level would be that. Now, the market is so strong, we may never touch it. Some people might just assume, hey, we're going to go there and not get bullish and miss an entire decent rally here. We have not seen that turn yet. And throughout the day, it continues to get a little bit worse, which is good for us because we're in cash. Again, I did place a trade, but the only way, let's see if I can actually nail down the trade where I actually placed. I believe it was an early trade. It was, I believe, right here. Yes. Right in here where we saw it freak out in the morning, I got in at 45.03. And it went up, scared overnight, and then we actually got a little bit above that. So I was fortunate to get out quick. I was given a very nice opportunity and actually made a mistake by not taking profits too. I'm sorry, this is actually where it was. The double touch, 45.03, got in right here. I basically said buyers have been coming in right around 11, 12, and that happened. So it went to here. Wish I would have sold here because I was seeing that, hey, this trend is just not holding. It continues to fake break out, then go lower. Okay, so regardless, we made a little bit of money, nothing to brag about. So the fact that we're positive is good. What I want to show you is this. Again, breadth is just something to be aware of. Where I've honestly not done well this year is going too far into the breadth indicators, because areas like the Russell 2000 and the normal stock that would show you that the market is not doing well at all. And that's usually not a good thing when the market is held up by mainly large cap. And it's still my fault for not being more objective about that. That's something I'm working on. And in times like this, I have to be willing to even just say, hey, if the S&P 500 is doing well, despite everything else not really doing well, it's a little extreme, but really the core large cap names have done very, very well with selective names. I mean, don't get me wrong, there are definitely other names doing well, but in terms of what's holding up the index is about 5 names are 25% of the S&P 500. So something I'm working on, something I need to improve on objectively. So the McClellan Summation Index, this eventually will likely cause some pain. This continues to get a little bit worse. This is as of Thursday, so this is even worse. This cross, the black crossing the red, is not good, but this could flip very, very quickly. So you can see the S&P 500 has gone up. The New York Stock Exchange summation index has gone down. Usually, eventually, that, like you can see here, this started going down, just went up a little bit, and then I'm not saying that's going to happen. I don't expect that to happen, but I'm just saying eventually it gives way, and we're kind of giving way a little bit now. So that might be all we get. I would love to see a 50-day moving average, but I'm going to be realistic and say I think that this gap might be a very, very nice buy. And that's very, very close. It's 20 basis points away. Or excuse me, it's 20 points away. So it may never happen. And it very well get bought. Where are we in RSI? So it's very close to a level where we normally get bought. So you can see we may never get there. This market is so strong at this point. I could see people getting in before it even touches that. Or it could be a nice fake out where it just goes directly below the 50-day and really force some people out quick. I would love to see it, but at this point, I don't see that happening. So some other indexes that I want to show you, it's not just the S&P 500, obviously, but this is not good. I want you to understand that under the hood, there are some concerns. The Dow is below the 50-day moving average, which my rules would be if I were in the Dow, that's a sell. Okay? So now it's becoming a little more interesting because it's getting not quite oversold yet, but it's getting more interesting, more potential upside, better risk reward here. But you can see it can go much lower than the 50-day moving average. So right here, if I were in, would be a sell. So I feel like I'm in really good position to be able to add here. And if we do see a turn, that could be a nice opportunity. So we also show you the Russell 2000, which again, this is what has concerned me for quite some time. Is now it's had a nice rally recently and coming back to the 50-day moving average, but it has gone nowhere since really February. Okay, so you can see what I'm seeing is, hey, participation is not good, and that's usually not good for the entire market. Well, this was a time where the S&P 500 and the large cap just absolutely broke a lot of rules. And it's something that I need to make a new rule for myself is, hey, you need to be more objective if certain sectors are not, or certain indexes are not doing well. Because 5 names could legitimately bring the entire index up. That's being very dramatic. I know more names did better than just 5. Plenty other names. I should have done better. That's not an excuse. It's basically me saying I need to make sure I follow these new rules in not getting out too quickly. What I've been very good at is preventing dips throughout my entire career. Where I have struggled is to hold on to names thinking they are overbought for no real reason than having an assumption. And that's not good trading. That's something I need to work on. So overall, there's a few more charts that I want to show and we will let you go. The Divergence Checkup. Let's see if we can see where this is. So I haven't really paid attention to this, but I would assume that it's, well, let's look at it. The Divergence Checkup, the S&P 500 is not dying, but look every time the 50-day moving average has been touched. Like there is definitely a trend here. It'll probably get near there. We're very close. We continue to go lower on the S&P 500 at 4470. Breadth, percentage of stocks in the S&P 500 above the 50-day moving average, that is actually not horrible. It's not great, but it could be worse. Okay, so we definitely saw percentage of stocks in the New York Stock Exchange improve. I believe this is pretty up to date. Okay, this data is as of Thursday, so it's going to be a little bit worse. Objectively, over the last few weeks, these numbers have really improved, which has been impressive. Is the data great? Like new highs in the New York Stock Exchange? This is not a good number, but again, if you just solely look, this is where I've been wrong. If you just solely look at breadth, you would have thought the world was ending. It is not. Okay? The S&P 500 has done fantastic. It's something that I need to, rule new rules. So, one more chart. Let's take a look here. Put call ratio. This again was my biggest concern why I was not adding. was this put call ratio. The put call ratio as of Thursday, after a decent decline, was only at 47. We want to see this usually at a much higher level, showing that there actually is fear. When there is no fear showing, when the market is going down, you usually want to go a little bit lower. Usually, doesn't mean it's going to happen, but overall, we're in good spot. I feel good about the position. This was a good trading week for us. The fact that we got some in, got some out really quick. There are opportunities. We're seeing some good names. Some of the areas that I'm looking at, XLV, I like healthcare. Now it's getting hit pretty hard, but I would love to see this test the 50-day moving average. I would not mind, like Apple is getting hit hard today on some news. That's a nice move. Now it might take some more time to work through that news because it's been a nice rally. Let's just put it that way. Amazon, I know these are not sexy names, but they have a ton of potential. I like this test back to the 50-day moving average a lot. Now it's an expensive stock, but from a valuation standpoint, it's actually okay. So I would not be shocked to see this gap tested eventually. Doesn't have to, but this little cool off makes me much more interested. So you can see there's definitely some opportunities. Let's see what SMH, which is semiconductors. That's really impressive actually. A green day on an ugly trading day. So this little trend here was bought. Now it's giving its gains back, but overall, it's a strong sector. Would love to get into it. Another really strong sector, medical devices, is giving some back a little bit here, but a scooter rating of 98 just shows how strong it is. I mean, going from 57 to 67 in 2 months, that's a very, very nice move. And it's an ETF. So some nice mix of ETFs, nice mix of individual names. UNH is getting spanked, but it will be interesting if this is the crater before we start to see some upside. So overall, let's take a look. It is 3:39. I want to watch the close. Not really a great week, but that gives us a lot of opportunities. So just wanted to kind of show you the things that I need to work on objectively and show you some of the new rules that I'm really watching. So for example, one of the rules was this. Had I been in the QQQ, which again, my rule is start trimming when the RSI is above 70. And it was above 70. So it's a great rule. It doesn't mean you sell everything. You just slowly get out and you would have had some nice gains here. And as you can see, it eventually gives away. Now you have a better buying opportunity. Even if it's here, it's better than holding on to this and just taking the loss. Okay. Now, long term, you would be fine in this, but short term, your risk reward up there is not good. Okay. So overall, it was a decent week for us, made a lot of wise decisions. Next week's going to be big. Seasonality wise, a lot happens next week. The news at this point, I don't think really matters at all. I'm just being honest with you. It is, are we low enough to create enough hedging to push us higher? That's been the move of 2021. Now, I think if you get that combination of fear, we're not really seeing fear yet. If you get a combination of fear and people saying these are good names at a good price, that's when your rallies come quick. I'm not sure we're quite there yet, but I do think we're getting close. So let's look one more time at SPX. Again, this is intersection session, so I might have to buy. Wow, that's a really nice move down. It's getting interesting, guys. So I'm going to drop it there. Have a great week. Might add some. This is getting very close to that level. I hope it goes lower. But overall, I think I'm going to have some great scalp opportunities in and out. So have a great weekend, everybody. Thanks for your trust. We're working to get some gains back. Thanks, guys.